When prices move this fast, fear just takes over. And that's a completely human reaction. It's not about being weak, it's because all that uncertainty feels incredibly personal. It's an immediate, stressful feeling, and if you felt it, you are definitely not alone. In this explainer, we're going to walk through that feeling, look at it through the lens of history, and maybe find a clearer way to understand it all.
All right, so here's our game plan. First, we're going to dig into why this volatility can feel so personal. Then we'll journey back through history's echoes to see past downturns and understand the psychology of panic that comes with them. After that, we'll explore how today might be different, zoom out to the long-term idea, and we'll wrap up with a guide to navigating that feeling of fear. It's our roadmap to getting some perspective.
Okay, so let's start with what's happening right now. That feeling of stress, the anxiety you get from watching these rapid price swings, it's not just in your head. It's actually a product of a very specific and very modern environment.
And that really is the question at the heart of all this, isn't it? Why does this one asset seem to create such a powerful emotional response? Well, the answer isn't simple, mostly because Bitcoin doesn't exist in a vacuum. Its price is really a reflection of a much larger, deeply interconnected system of information, human emotion, and of course, global events.
So what's fascinating here is how all these things are connected. They kind of feed off each other. We're living in a time of real global economic uncertainty, and any story about how to deal with it just spreads like wildfire on social media. This, in turn, can cause really quick shifts in the public mood and investor sentiment. In a market like this one, where how much risk people are willing to take is a huge driver, emotion doesn't just nudge the price, it can become the main thing driving those wild swings we see.
And this is what you get. A complex, fast-moving system where one piece of news or even just a change in mood can send ripples that get bigger and bigger as they spread. It makes the whole thing feel so alive, so unpredictable, and yeah, really personal. But here's the crucial thing to remember. This feeling, this cycle of fear and uncertainty, it is not new at all.
To really get what's happening now, we have to look back. Bitcoin's history isn't some clean, straight line going up. It's actually a series of really dramatic cycles, and each one was marked by these periods of intense doubt and fear that, for the people living through them, felt just as stressful as anything we feel today.
So just take a look at this timeline of the major downturns. Back in 2011, after its very first big run-up, the price just cratered, falling over 90%. Then in 2013, the main exchange at the time, Mt. Gox, completely collapsed, and that kicked off a brutal, multi-year downturn that became known as the first crypto winter. It was a long, cold season. Then in 2018, after a massive boom, the price fell dramatically again. And, of course, most recently, the winter of 2022 saw prices drop by over 70% from their all-time high. Each and every one of these periods felt like it could be the end.
I want you to try and put yourself in that moment. It's 2013. The main exchange, the place that handled almost all of the trading, was literally imploding. The system itself seemed broken. And the story in the media wasn't just skeptical, it was openly hostile. This headline captures the mood perfectly. Pretty much everyone agreed this whole thing was a failed experiment.
Can you just imagine what that felt like if you were one of the few who still believed in the idea back then? The infrastructure you counted on was just gone. The public story was completely negative, and the price was in a total freefall with no end in sight. There was this deep sense of isolation, a very real fear that the whole project could just vanish. Trust had completely evaporated.
And this doubt didn't just go away overnight. It lingered. This wasn't a quick bounce back. 2 years after that 2013 peak, major news outlets were still basically writing Bitcoin's obituary. This quote from 2015 really shows that the feeling of failure wasn't just a quick reaction to a crash, but this long, drawn-out period where most people believed the idea had simply run its course. And yet, it didn't disappear. The network just kept on producing blocks, day in and day out. The developers kept working on the code. The core idea, even with all the financial wreckage and public ridicule, it endured. And that resilience, well, that's a huge part of this story, and it leads us to a deeper question. What is actually going on inside our own minds during these cycles? So, that brings us to the human side of all this. Because while the tech changes and the markets change, human psychology, that stays remarkably consistent. The same patterns of fear and panic that we saw in past cycles are just as relevant today, because they're basically hardwired into how we respond to uncertainty and risk.
To really understand how we react, it's helpful to look at two different mindsets. The first is investing, which is all about careful analysis and focusing on long-term fundamentals. The second is speculating, which is more focused on short-term price moves and market momentum. Now, there's no judgment here, but it's really important to be honest with ourselves about which game we're playing, because when markets get chaotic, that line can get blurry real fast, and a long-term plan can suddenly turn into a short-term panic.
And that's exactly when we're most vulnerable to these really predictable psychological traps. You've got herd behavior, that powerful urge to just do what everyone else is doing, buying in a frenzy, selling in a panic. That leads right into panic selling, which is a purely emotional reaction, not a strategic one. Fear spreads like a virus, a contagion of terror. And the funny thing is, in both the good times and the bad, we fall for this idea that this time is different, convincing ourselves that the old rules just don't apply anymore. All these things create a feedback loop where fear just creates more fear.
So, okay, seeing those timeless psychological patterns is absolutely crucial. But it's also true that the world it's all happening in has changed. A lot. The Bitcoin ecosystem we have today is fundamentally different from what it was back in 2011 or 2014. And understanding these differences is really key to recalibrating our perspective on that fear.
Just look at some of the key differences today. Think about it. We've gone from a world that was basically all small-time hobbyists and investors to a place where some of the biggest names in finance are involved. The approval of regulated products like ETFs gives a level of access and clarity that was just unimaginable in the old days. The actual market infrastructure, with regulated exchanges, professional custody, deep derivatives markets, it's all just far more grown up. And beyond the price, the network itself is being used to settle trillions of dollars in value, proving it can work as a global settlement layer.
Okay, now this is really important. This is maybe the single most important takeaway here. Just because the market is more mature, that does not mean the risk is gone. Volatility is, and probably will continue to be, a core part of this asset. But the nature of the fear is what's changed. The fear back in 2013 was that Bitcoin itself, the whole idea, could just disappear. The fear today is more about price volatility inside a much more established, integrated, and resilient ecosystem.
So with that new context, let's zoom out for a minute. Let's get away from the short-term noise and volatility and just revisit the fundamental idea that has allowed this thing to survive all those cycles of fear. What is the core concept that keeps people building and holding on through the good times and the bad?
Well, the idea that's really stuck around the longest is this concept of digital gold. And this isn't just a catchy phrase, it's a comparison based on some specific shared properties. Just like gold, Bitcoin has a supply that is verifiably scarce and finite. It's decentralized, which just means it isn't controlled by any single government or bank, and because of these things, many people have come to see it as a potential store of value, a way to preserve wealth over the long haul outside of the traditional financial system.
And look, this isn't some fringe idea anymore. As this quote from Fidelity, one of the biggest asset managers in the world, shows, this store of value idea is being seriously looked at by the highest levels of finance. The whole conversation has shifted from, is this thing a weird curiosity, to, how might this work as part of a long-term strategy? The idea has simply survived long enough to earn a seat at the table.
And all of this brings us right back to where we started, that feeling of fear. We've looked at what's driving it now, the history, the psychology, and the big long-term idea. So how can we actually use all this information to process our own emotional responses when things get crazy?
The first thing, and maybe the most important, is just to acknowledge that feeling fear in these moments is, well, it's normal. It's not a sign you're doing something wrong. It's just a natural human response to financial uncertainty. Second, remember that history gives us some powerful perspective. These cycles of intense fear, doubt, and negative headlines are not new. They're a reoccurring pattern. And finally, understanding these patterns, both in the market and in our own minds, is the best tool we have for managing the stress that comes with it all. Knowledge can really be an anchor in a stormy sea.
Look, none of us can predict the future. And the point of this wasn't to try and remove the uncertainty that's just a part of any market. The future is still unwritten. But what history does give us is a really crucial lesson. It reminds us that in those moments of peak panic, our fear can feel like the only thing that's real. Yet time and time again, the reality turned out to be that the underlying idea was more resilient than the loudest fears of the moment. Perspective doesn't stop the storm, but it can certainly help us navigate it.